Hey there, it's Ryan Skeggs, and this is the Mortgage Minute. Thank you so much for tuning in. So we had a crazy week in the mortgage market. So you know what? Before we get into that update, click that like button, click that subscribe. I've got over 90% of the viewers have not subscribed. So get down there, click that subscribe button. Weekly videos coming out to keep you updated on the mortgage market, keep you updated on interest rates, how to budget, what's going on. If you're thinking about buying the home in the next 6 months to a year, or potentially a real estate agent, get down there, click that subscribe button. I'll keep you updated on where we're at. So here is your update. I hate to tell you, you saw it right on the front. Rates rise crazy. So we saw interest rates, according to Freddie Mac, go from 2.73 to 2.81. That was up 8 basis points, and that is one of the largest upticks in a 1 week period that we've seen. So what does that exactly look like to you as a consumer? So you likely saw interest rates go up by an eighth or a quarter% inside of a week. Now, a majority of those clients, remember, every client's different. Every FICO score, meaning credit score, every income, every down payment, those all depended upon what rate you're going to get. Now, with that said, we saw rates rise over this past week. No doubt about it. No two ways. With that said, the conforming rates, which is loan amounts under 548,250 in this local Chicago and North Shore market, these are the interest rates that we're talking about. The jumbo market actually stayed pretty darn steady. So that was one of those, is that what's going on in loan amounts below 548,250 in the conforming loan market, that has a lot to do with mortgage-backed securities, a lot to do with treasuries. There's a lot of short-term issues that are going on right now for the reason of why rates have risen over this past week. My opinion, I'm not scared. Keep calm and trust your loan officer, right? So in my mind, if you've got to lock a rate in the next week or two, okay, absolutely. You better get that in. They're going up pretty quick, but we're going to settle out. So as much of this information that's coming in and really affecting the mortgage-backed security market and the interest rates, we're going to potentially see that settle. That's my opinion. So I'm not scared of people necessarily missing the boat. It is, we better be tooting the horn here and saying all aboard. We're getting ready to leave. This cruise ship is sailing, right? We all know that interest rates are potentially going to rise, and I'll put some links to articles and a couple economic forecasts below. But with that said, jumbo rates still didn't move a ton. If the overall market was saying that, hey, rates are going to rise, exponentially, and we've absolutely hit our low, we would have seen those go up as much, or we've seen those follow just as much as we did on those conforming ones. The reason why we didn't see jumbo is that those are going into like a bank's portfolio, to a hedge fund, to some sort of investment portfolio where they're keeping those, gaining that return. So those rates absolutely stayed relatively steady, maybe an eighth difference in rate from week over week. So I was speaking with a client. We were looking at a 10% down scenario. Remember, every program's different. Every lender has different programs. Every client is eligible for different programs. But with that said, we were looking at a 10% down program. I said, hey, let's pump the brakes for a second. Let's see what happens. We've got a long time till we got closing coming up. So let's wait and we'll see where rates go. There's no reason to pull the trigger and, get that heart rate up because we saw that rates rise, and we've seen a lot of headlines around that. So my advice to you, keep calm, trust your loan officer, ask what they see is going on in the market. This is my opinion on your mortgage market and the Mortgage Minute. Thank you so much for tuning in. Get down there below, place some comments, hit that like button, hit that subscribe, and we'll see each other again very, very soon.